Ladies and gentlemen, good day, and welcome to the Prestige Estate Q1 FY26 earnings conference call hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pritesh Sheth from Axis Capital Limited. Thank you, and over to you, sir.
Thank you, Muskan. Good afternoon, everyone. Thanks for joining in. We have with us management of Prestige Estates, represented by Mr. Irfan Raza, Chairman and Managing Director, Mr. Zaid Noman, Executive Director, and Mr. Amit Mor, the Chief Financial Officer. I'll now hand over the call to the management for the initial comments, and then we can start with the Q&A. Over to you, sir.
Thank you, Pritesh. A very good afternoon, everybody, and thank you for joining in today's call. We're very pleased to report that Prestige has commenced the financial year 26 with its strongest quarterly performance to date. It's a clear reflection of the sustained momentum and deep structural demand across our core markets. In the first quarter, we achieved a record-breaking sales of 12,126 crores, growing nearly 300% year-on-year, setting a new benchmark in our company's history. We sold 4,718 units across 9.55 million square feet, backed by strong customer demand and high-quality launches. Equally encouraging is our highest-ever quarterly collections of 4,523 crores, growing 55% year-on-year, underscoring the disciplined execution and cash flow stability embedded in our business. The geographical sales mix this quarter marks a decisive milestone in our evolution as a truly pan-India player. For the first time, the NCR region contributed the largest share at 59%, followed by Bangalore at 21%, Mumbai at 12%, and Hyderabad at 5%. We launched our 4 new residential projects during the quarter, totaling 14.94 million square feet, including our maiden launch in NCR, the Prestige City, Indirapuram. The response was phenomenal, with nearly 80% of the inventory sold at launch, setting the tone for our expansion in North India. On the completion front, we delivered 5.45 million square feet across 5 residential projects, including our first ever project completions in Mumbai, which were executed in just 3.5 years. This is a testament to our robust planning, execution, efficiency, and commitment to timely delivery. Additionally, we completed the Prestige Turf Tower in Mahalakshmi, which enabled us to move full steam ahead on the next phase of our marquee project, The Prestige Mumbai. On the business development front, we added 7 new projects across 4 geographies: Bangalore, Mumbai, Chennai, and Hyderabad, with a combined GDV of over 20,000 crores. Our annuity business continued their steady performance. In office, we leased 1.21 million square feet, maintained 94% occupancy, and achieved exit rentals of 523 crores as of Q1 FY26. We are on a course to achieve exit rental for office in FY26 of 819 crores. In retail, our malls recorded a gross turnover of 590 crores, with occupancy levels of 99% and exit rentals of 271 crores. The first quarter has laid a solid foundation for the year ahead. The filing of the DRHP for our hospitality platform is a strategic step in unlocking value across verticals and setting path for our next growth. Looking ahead, we have a robust pipeline of launches planned across Bangalore, NCR, Mumbai, Hyderabad, and Goa. We are confident that the momentum built this year will carry through the rest of the financial year. Thank you once again for your continued support and belief in Prestige's journey. With this, I open the floor for questions, and we'll take them one by one.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, wait for a moment while the question queue assembles. The first question is from the line of Akash Gupta from Nomura. Please go ahead.
Hi, am I audible?
Yes.
Hi, sir. Congratulations on the great performance. So my first question is with respect to your pre-sales guidance for FY26. The guidance is close to 260 billion. Do we see an upside risk to the guidance. With respect to launches, what launches are we looking at in the next 2 quarters?
Sorry, I lost you. What is the question?
Hi, am I audible?
Yeah, now we can hear you.
Yeah. So, my first question is with respect to your pre-sale guidance for FY26. Are we seeing an upside risk to that guidance, considering we have already done 120 billion in the first quarter? And then I wanted to understand on your launch pipeline, what launches are we looking at in this quarter and in the next quarter?
Okay. Now, see, we'll stick to our original guidance, which is between 25 and 27,000 crores. And we'll see how this quarter performs, and then maybe we can review it further. Now, launches for this quarter in Bangalore, we have the Prestige Greenbrook. It's a plotted development. We have Prestige Crystal Launch. It's a plotted development. We have also Prestige Autumn Leaf, which is a plotted development. Along with this, we are also trying to see whether we can bring the Evergreen at the Prestige Raintree Park, which is a fairly large development again in Whitefield. And we're just pushing for those approvals, which is a process. It will come. And the RERA also has to come. But if we are able to get that through, even that will be the launch for this quarter. That is in Bangalore. In Mumbai, we are trying to bring in the Prestige Highland Park, which is Dhaisar, where we bought the land. And that's hopefully will happen in September. And then the other one, which we already have the RERA, will be the third phase, Mayflower, of the Prestige City, Indrapuram. Even that will happen in September. These are the launches that we have in the pipeline for this quarter.
I see. Got it, sir. And sir, on your commercial leasing, particularly for the Bombay portfolio, which is the Prestige and Prestige 101, we have roughly 9 million square feet, I think, of leasable area, and we have leased roughly 1.5 million square feet. I wanted to understand, what kind of demand are you seeing this for your BKC commercial portfolio?
The demand has been extremely good. We've already leased 50% of our portfolio in BKC X, and that's a good sign. And because pre-leasing in the Mumbai market is non-existent, now if we have managed to do that and at some great numbers, I think the team has done a wonderful job. But I've also told them to go slow, because let the product get ready. Product gets ready only in 27, 28, and then we'll, as closer to our product getting ready, we will be pushing more for leasing, because we also want our customers to get the confidence.
Got it. And sir, one final question from my side on the Jijamata development. So I think we have already done the land clearing and everything. So I just wanted to understand, what kind of product positioning are we looking at here, and when are we planning to launch this project?
Yeah, see, it's a mixed-use development. It will have retail, 1 million square feet of premium and luxury retail. Apart from that, we'll have office of 500,000 square feet. Then we are having the Hilton plus the Waldorf Astoria and conferencing center. That will be one tower. And sitting right on top will be the Waldorf Astoria branded residences. And then we have 2 towers of residential, which will be for sale.
Okay. And when are we planning to launch this project?
This is all work in progress. We need to get our design in place. As we speak, the team is working hard on the design. Once the design gets frozen, then it's approval. Then it will be, we'll have to time the launch properly.
Understood, sir. Thank you so much, sir. Best of luck.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask question. The next question is from the line of Puneet from HSBC. Please go ahead.
Yeah, thank you so much, and congratulations on great performance. My first question is, if I look at the potential sellable value and the margin that you've given for upcoming projects, it comes to about 52%. Is that broadly how we should think about your newer projects and the new additions as well?
Puneet, is all about opportunity. That keeps fluctuating. We'll be happy with around 35%. And
52%, Puneet, is basically because we would have spent on land cost. So the slide you are seeing is the free cash flow slide. So we have already spent on land cost. So we'll be getting that cash flow. So 52% is the free cash flow we'll be getting, but the margin will be in the range of 35%.
Okay, margin would still be 35 because that you haven't spent much on land there so far as I see, right? I mean, it's a small, okay, that maybe is not disclosed yet.
As we go along.
Okay, fair enough. And secondly, if you can also, talk about your new acquisitions, which you've done almost 20,000 crore worth. Have you paid for that already, or is there still some bit of balance to pay there?
The two major ones are on RD. The one in Hyderabad is again RD, not a significant payout. Okay. The balance, like the one in Chennai, again we have a land payment plan of which we have paid 100 crores. The balance 300 crores will be paid over a period of time.
So in all consolidated, how much is balance to spend on just land payment? Including maybe the previous business development that you may have done?
Around 500.
Sorry, 500?
Yes, 500 crores.
Okay, that's helpful. Thank you. And lastly, how do you think about peak debt? Your CapEx run rate should ideally pick up given that you're looking at completions for large projects in FY28. So where should we see debt ending for end of 26 or end 27?
If you see our cash flow during the quarter, we have almost got a gross inflow of around 5,000 crores.
Yes.
If you keep the same run rate, the entire year will be getting around 18 to 20,000 crores. Of which we will be spending around 8,000 crores on construction and around 4,000 crores on your overhead, landowner payments and all that. So from the operating activity, we should have free cash flows of around 7,500 to 8,000. Of which in the investing activity, we'll be deploying close to 3,000 to 3,200 on the CapEx, the full year guidance, and 4,000 on our business development. So on a full year basis, I think so, debt should increase by 1,000 to 1,200 if we don't do any further monetization plan.
Understood. That's very helpful. Thank you so much and all the best.
Thank you. The next question is from the line of Yash Gupta from Prestige Estates. Please go ahead.
Yeah, Yash Gupta this side. Good afternoon, everyone. Referring to slide number 8, we reported completion of 5 projects in Q1 FY26 with cumulative GDP of around 5,000 to 5,500 crores. However, as per our slide number 13, the residential revenue recognized during the same quarter stands at 1,573 crores. Could you please clarify the reason for the variation?
Again, the revenue recognition is not just based on project completion. It is also based on handover to the client. So we have completed those projects in the current quarter, but the handovers are still happening. So those generally a handover of large projects takes 6 to 9 months. So in next 3 to 4 months, we should be completing those handovers and the revenue recognition will happen.
And anything on for the complete year, what revenue we are looking to recognize in the residential business for the complete year FY26?
If you see, we have unrecognized revenue of more than 50,000 crores. In the current financial year, some of the projects in TPC Sarjapur should get completed and the revenue should start flowing for that. So we expect close to 8 to 10,000 crores of residential revenue to happen in the current financial year.
Okay. Just referring to the same slide number 24, we are saying that we will book around 57,000 crores of revenue, could be say next 3 to 4 years down the line. So roughly 15,000 to 20,000 crores of revenue every year. And if we compare the same thing with FY25, in which we have just booked 3,000 to 4,000 crores, Is this understanding correct that we are looking to book 15,000 to 20,000 crores of revenue in maybe FY26, 27, 28, and then thereafter?
Yes, there will be an increase in revenue recognition as we move forward. So as I mentioned, around 8 to 10,000 should be the revenue guidance for this financial year from the residential segment. Okay, but this will pick up with projects getting completed in financial year 27, and most probably in 27, my residential revenue contribution should increase to 15 to 16,000 crores, and it will keep increasing year on year.
And anything on the margin? What like 35% margin, EBITDA margin?
Yes, on a portfolio level, our margins are at 35%.
Okay, sure. Thank you very much.
Thank you. The next question is from the line of Abhir Pandit from Old Bridge Mutual Fund. Please go ahead.
Hi, sir. Are you able to hear me? Hello?
Yes, we can hear you.
Yes. Hi, sir. I wanted to understand specifically the fact that, sir, going ahead, the free cash flow generation from your residential business is going to be major in a huge amount and is going to outstrip the requirements in the commercial business. And also seeing the fact that the hospitality business is, it's going for an IPO. So there is going to be a large amount of free cash flow generation. So how do you see the allocation of this free cash flow? Will it be towards land, or how are you looking at it?
As I mentioned, this financial year we are budgeting close to 7,500 to 8,000 free cash flows from our operating activities, of which around 3,200 we are planning to deploy for CapEx, and the balance will be for business development, because we are selling the stock and we need to replenish the stock by doing more business development. So yes, a significant portion of our CapEx outflows will be financed from our residential business, but still will be maintaining, I would say, 60% internal accruals and 40% from debt on our CapEx business. And as far as the hospitality, it depends on as and when the requirement.
Okay. Sir, my second question would be, sir, since the industry is now looking towards luxury projects in majorly all micro markets, so and since the real estate cycle is possibly in the third or fourth year, how are you looking at the entire real estate cycle?
It all depends on what you define as luxury. If it's all projects worth above 25 crores or to 15 crores or whatever, and so on and so forth, that I would define as luxury.
Okay.
Luxury is a very, very niche market. It's not that we want to sell this every day to everyone. These buyers are all few and far between, and these are all fussy buyers. So we have to target that audience correctly, and we don't have too many of them. So if you're trying to do too many of the luxury projects, we'll be getting hurt.
Okay. Sir, last question from my side. Sir, just an update on the Prestige Pallavaram Gardens. It's been more than a month from launch, so could you give us a status on how's the offtake on this project?
It's done extremely well, and it's still work in progress. And this month also we have Ashada. In spite of that, because Chennai is that different market where a lot of superstition and beliefs happen. So, but then I believe for whatever we have done within the month, it's really picked up well and done extremely well. We'll report that in the next one, in the report.
Okay. Thank you, sir. I'll join back in the queue.
Thank you. The next question is from the line of Biplab D. Verma from Antique Stock Broking. Please go ahead.
Good afternoon, everyone. First question is on that annuity slide that you have. I just noticed that the commercial portfolio slide 27, the projected annuity income step up, it say for FY26 and 27 has changed from what you projected in previous quarter. So my question is there delay in any of the projects that were supposed to start operation in FY26-27? What was the reason of this shifting of annuity income step-up?
Biplab, actually, there's no delay on any of the commercial projects. All are progressing as per the plan. What we had mentioned actually in FY26 was projects completed up to Q1 26. So there were three projects, basically your Dial project, your Lakeshore Drive project, and Tech Forest, which are planned for completion in the current financial year. So those rentals had not come. We have actually devised a presentation and uploaded in the website. So if you see for the entire financial year, at the end of financial year 26, our exit rental will be 8,200 million.
In FY26?
26. The 5,200 was basically for projects completed up to quarter one. So after factoring completions in Q2 up to Q4, my exit rental will ramp up to 8,200.
So at the end of FY26, our exit rental will be around 8,000 or so. Is that correct?
Yes.
Okay, that's right. Also, the projects that you have mentioned, that is, we are planning to launch in Q2. What would be the GDV of this project launches planned in Q2? Total GDV, approximate?
Just a moment. It will be 3,500 excluding the Evergreen Park. If you include Evergreen as well, it will be 8,500.
Okay, so Evergreen is a big project, 5,000 crore GDV project.
Yes.
Okay, sir. And my final question is on your, increasing footprints in MMR, and I was just passing by Jijamata Nagar project. Excellent, your boards are there. It has been cleaned up, and excellent location. So my question is, it seems that most of your projects in MMR is with alliance or with DB Realty or Belvoir Estate and its promoters. Should we expect new acquisition in the MMR region through other partnership or independent channels? So that is my last question.
So thank you for the appreciation on the work that's happening. Firstly, we would like to say that we are very agnostic when it comes to the kind of opportunities we look at. We are not tied up with anybody, or we don't have any exclusivity. But we'll go on an opportunity to opportunity basis based on the merits of the development. We'll look at the opportunity. But I hope that answers your question. But yes, our strategy overall across the country to grow so fast is to work with developers who have land already tied up, have certain level of approvals, because it makes things easier.
Okay, sir. All the best.
Thank you.
Thank you. The next question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Yeah. Hi, Irfanji. Congratulations on a great quarter, sir. So my first question is on the leasing in BKC. So you said that 50% is leased out in Tower X. So we had benchmarked the rate at about 325. So by the time these towers are ready, do you think that we'll be reaching that rate, or what rate you have locked in for now?
No, actually, our leasing rate is above 350. So when we complete it, I think it should go above 400. But right now, what we have achieved is above 350. Around 370 is the rate that we have.
Okay. And the carpet rate will be almost double of this?
What I'm talking about is super bill, not carpet.
Yeah.
So it can be double.
Yeah.
Mumbai way of calculating carpet to super bill is 0.65 now.
Okay, got it. But great. I mean, So 400 is what you're looking to achieve with this, and rates will go up higher as you lease further because half of the building is already. So what kind of blended rate do you think by the time it's ready, it should trade at?
Hello?
So by the time the building is ready, sir, and the entire leasing is done, what kind of weighted average rate can we expect from this now?
Take it as it comes. We'll have to see what the market is each time. So at the moment, we are pretty happy that we've got some good companies who have committed the space. I can't reveal the names just now, but they are top-notch companies, and that is what gives us the sort of courage.
But kind of mix, like, is it more financial or IT, ITS or GCC? So what kind of tenants, I mean, at least the sector, at least you can highlight.
Corporate, they're basically corporates, and then there are also some what we call co-working spaces also that have committed the space.
Okay. And the second question is on the Prestige business base, sir. So 7,000 crore GDV addition. So is it a commercial project? Also, what do you want to do here? Just wanted to understand what is the nature.
A cut strata sale. We are looking at, there is a vacuum in the market for smaller offices, and we felt it was a great opportunity. Location was good. The High Court is coming next door. So there'll be a lot of the smaller businesses, smaller requirements for smaller offices. So we haven't done strata for a long time. And in Mumbai, we haven't done at all. So we believe this was a good opportunity. So basically what we are making is galas and selling it.
And this is in partnership JDA project or like is it entirely our project?
Sir, as of now, there is some understanding we have, but the company is handling this project totally on their own. But there is some, because of the work done by our partners, they will be getting a certain percentage of the profits, the top line.
Okay. And my other question is basically in this quarter, was there any further consolidation of stake between the promoter and the company in this quarter? And if yes, then what was the quantum?
That's all a thing of the past. There's no further changes that are likely to happen or will happen. All the consolidation, whatever that was needed to be done, is already done.
Okay. And just the last question on sustenance sales announced with the inventory which we have. So what kind of sustenance sales can we expect on a quarterly basis? Because launches mostly for us has been a significant portion has been a sellout. So what kind of sustenance sales we can expect on a quarterly basis now?
Now, you see, we've guided for 27,000 for the year. We've done 12,000, but then we have 20,000 inventory with us. So I believe from the inventory that we have, we should be able to sell about 25% of the inventory. But we have to add up new inventory to get larger numbers. So at the end of the day, with the new launches and the sustenance sales, we should be able to do much more than what we already talked about. But as of now, I want to be guarded on this. I want to still stick to my 25 to 27 for the year.
Okay. And Forest Hill Phase 2 you did not mention in the launch. Is it going to happen in second half? Because this quarter you did not name it.
No, Forest Hill has been selling every week after week.
No, Phase 2, sir, and next 2 towers I was talking about.
No, we haven't launched those. You see, my strategy first, since we opened one tower, there are 600 odd units in that tower. We want to clean up the inventory there and then look at the second tower and the third tower. We don't want to open up everything and make a mess.
Okay. But this year it will happen, so second half? Like when are you targeting it?
It depends on the velocity. I want to clean up the first tower which we opened up and then start launching the other towers.
Sure, sir. Thank you and good action on the BD side and good that you added that slide. That has been what we've been wanting. So, but 20,000 is a big number. Yeah. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Deepak from JM Financial. Please go ahead.
Hi, good afternoon. This is Deepak Gupta from JM Mutual Fund. Thank you for taking my question. My question is related to a question asked by the previous participant with respect to promoter stake into some projects which was planned to be consolidated into the listed entity, be it projects such as Nautilus and Ocean Towers. If you could share an update on that.
No, there's no change. It's the same thing. There's absolutely no change. Promoter has some shares. I mean, we did some consolidation. That's over, and that's a thing of the past. There's a certain residual share that will remain, and that there's not going to be any change.
Understand. To clarify, Nautilus promoters don't hold any stake.
Okay, got it. And secondly, last, about a year and a half back, there was a sort of a funding arrangement done with ADIA for 4 projects, which were getting carved out. If you could give us an update, what's the status of that arrangement and how is that going?
No, ADIA, we had a platform, but we need the funds, so we have not drawn out anything.
Understand. Okay, thank you.
Thank you. The next question is from the line of Abhinav Sinha from Jefferies India. Please go ahead.
Hi. Sir, on the business development part, great to see the numbers. Can you just talk about what is the payment that we have made for these projects and if anything is pending here?
See, some of them are actually JDA, so there's not major payment like Tellapur, Pujanhalli, Kotanur. These are JDA projects, so there's not major payments on these projects. What is the owned land is actually Velachery and Pulimari. In Velachery, we have paid 100 crores. In Pulimari, another 70 crores is what we have paid. So total 170 on this. And apart from that, other projects as well, we have the entire quarter close to 600 crores is what we have paid. 650 crores on residential segment.
Okay, so other projects have paid 600, although they're still in JVs, right?
On entire total business development, we have paid 650 for the quarter. On these projects, close to 200 crores is what we have paid. 250 crores.
Okay, got it. And is there like a GDV addition target or, what we can expect given the large budget that you have highlighted for the year?
So this is a work in progress and it's organic. That's how the GDV addition happens. We are providing this because we got a lot of feedback that they want more clarity. So whatever has been firmed up, we are highlighting it and adding it as an extra slide. Our target remains as an annual target, and that's how we keep adding the GDV.
And that annual target is basically replacement of the year sale. Is that the target or?
Right, that's right.
Yeah. Okay. So secondly, on the launch slide, so can you just give us a little detail on where Falcon City and Raintree Park are exactly in the approval process? Which stage are they in?
So Evergreen, we should get the approval this quarter. Falcon City should also take maybe another quarter or two at the most to get the approval.
Okay, so Evergreen we should get the RERA this quarter and launch, and Falcon City we will apply for RERA next quarter. Okay. Got it. And finally, on the Mumbai projects which have been added, I was looking at slide 29. So can you detail where are the locations of these 3 commercial which are upcoming?
Sure. So Prestige Quantum is Sahar. Is an office project in Sahar. The next number 10 commercial is at the Prestige Place. This is part of Jira Mata Nagar, which is a mixed-use development. We've conceptualized it as the Prestige Place. So it'll have, as Mr. Razak said, office. It'll have hospitality where we're getting the Waldorf Astoria. We're going to have branded residences by the Waldorf Astoria, which is for sale, and as well as for the luxury residential and retail as well. So that is what comprises the Prestige Place. So that's what the commercial is. And Prestige Business Bay, this is also in outside BKC.
Okay, got it. Thanks and all the best, sir.
Thank you. The next question is from the line of Karan Khanna from Ambit Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just a couple of questions from my end. Firstly, if I look at slide number 22, your upcoming launches, most of this is largely skewed in Bangalore for the rest of the year. Given all the news flow that we're hearing around job cuts in the IT sector and the larger, feedback that we get from channel partners about pricing sort of pressure in the Bangalore market, where rate hikes are becoming more of a challenge, how do you see this in terms of, the overall market trends, and more importantly, what's the on-ground sense that you're getting as far as, price hikes that you're being able to take in your current projects?
So if you see the last 2 quarters, I think the market has performed very well. It's a stable market. Bangalore has always been a stable market. And given the higher realizations, there has been good demand and absorption. Most of the projects, whatever we've launched in Bangalore, have sold extremely well, right from plots to apartments. Southern Star has sold well. We've launched the Raintree Park in the past, it sold well. We've launched Gardenia Estate, it sold well. So we don't see anything on ground where what you're saying has any credibility. So I would say that things are good and they're very positive on the market. And, it's been very resilient as well. So I think this segment we're very confident about and we have high conviction.
Sure. And then second question, if I look at slide 23, the GDV of new acquisitions done during Q1 FY26, what kind of IRRs are you penciling in terms of new acquisitions that you're doing this quarter? And more importantly, how have you seen the IRRs trending over last 2 or 3 years in all the new project acquisition that you've done?
Generally, we benchmark our business development with a gross margin of 30 to 35%. So even the acquisitions we have done in Q1 will be in that range. It will be in the range of 30 to 35% gross margin.
Sure. And then lastly, in terms of, given the success that you've seen in NCR in Indirapuram, how should one think about, future launches? I understand you're looking at FY27 launches for Sector 150 Noida and also KG Marg, but are there, possibilities for you to sort of front-end the launches in FY26 in place of FY27?
See, we are working on adding up new opportunities. So I think this year, by the end of this financial year, we'll have some new opportunities and we'll reveal more about it. As of now, it's work in progress.
Sure. I'll come back in the queue. Thanks for the update.
Thank you. The next question is from the line of Pritesh Sheth from Axis Capital. Please go ahead.
Yeah, just a couple of questions on Hyderabad and Chennai market. So I think Hyderabad, Prestige City, after that initial success, project has now gone into suspense and a little bit slower than our usual standards. I think we last quarter did around 500-600 odd crore of sale combined from Prestige City as well as I think Spring Heights. So how are you reading Hyderabad as a market currently? Any specific reason why we are a little bit slow on monetizing the TPC Hyderabad inventory? And also Chennai, your experience with this first project, and since you are expanding your pipeline there, in general, what would be your expectation of annual contribution from Chennai as a market once we build this pipeline?
No, Chennai has done well. So also Hyderabad, we are talking about Spring Heights. Now, Prestige Spring Heights, we did what we did without the CEC. There was a pent-up demand from our existing customers. But then the thing is, I think both projects have done well, keep doing well. We ourselves are not pushing the sales too hard or not promoting it because we also want the price to go up a bit. There's no sense in just selling it off very cheap. So we've increased the price. We've kept it there. The momentum is quite good. We just finished excavation. There's a long way to go. And I believe both these projects have performed well. And you asked a question, what will be the contribution of Chennai annually when we get our act together fully? I believe we should get 5,000 crores from Chennai. And I think we'll get that once we have at least half a dozen projects moving, out of which we've got 2 more in the pipeline.
Sure. And just on Prestige City, Hyderabad, any specific reason why it has gone a bit slow after that initial rush?
No, it is, I think every month sales are happening. We've increased the price also there. And the inventory that we hold is very small. And I think as we go along, there's a momentum and push that happens when I've sold 75% of the inventory already. The balance really need not be pushed, because the project is still only halfway stage.
Got it. That's really helpful, and that's it from my side. Thank you. All the best.
Thank you. The next question is from the line of Abhir Pandit from Old Bridge Mutual Fund. Please go ahead.
Hi. Thank you, sir. Sir, my query relates to your execution that you have done. I believe you have done 2 major projects in Mumbai in the span of 3.5 years, right? From launch to handover. This execution speed is truly remarkable. But just now trying to understand, since the breadth of your operations is now increasing to a great extent, how are you managing the execution risks given the scaling up of your operations? And specifically, this is in relation with Bangalore, since we have heard from your peers that launches or approvals related to launches have been facing an issue recently.
This approval issue will be there till time immemorial. There will be some changes in the law. There will be some changes in the people who come inside. But I think the code is very much the same. In Bangalore, yes, there was some hiccup. I think we should not cry about it. That also goes on. There was some issue based on some charges and other things. And the developers got a favorable order. We won the battle, lost the war. So now the government says, without any charges, how do I sanction plans? We also need money. So that is going on. It's work in progress, but approvals will happen. I don't see any reason why it shouldn't happen.
Okay.
And you said, you asked about the execution. Yes. Execution risk is always there. So that's why we at Prestige engage the best-in-class contractors with the proven track record, and we build relationships with all contractors. You see, it's just not the civil. Along with that is MEP, it's vertical transportation, it is doors, windows, all of it. So since we have that relationship and we have got proven people with proven track record who delivered to us again and again, project to project, so we deal with them, so it's easier, and we are able to extract out good work out of them. So that's how we are able to execute faster. And most important is there's a process, there's a team that is on the job, and whatever projects that we've taken up, the speed will never be sacrificed. Of course, now with all cash flows being tied up and kept, so there's no problem on cash flows also. The money has to be spent for the project as quickly as possible.
Okay, sir. That's all from my side. Thank you.
Thank you. The next question is from the line of Akash Gupta from Nomura. Please go ahead.
Hi, sir. Thank you for taking up my follow-up question. Sir, so there is the news around job losses, and then there is another news of this Trump tariffs impacting India in macro. I just wanted to know your thoughts around the resilience of the Indian real estate demand. So I just wanted to know your views on it. And also if you could give some data around footfalls and conversions. Has that changed on a year-over-year basis, or are you seeing that improving?
See, now the macro environment keeps changing every day. Something or the other new keeps happening. Now that doesn't mean to say that we should stop building or not do business. Because everywhere there is that thing. Now, job losses have happened. And these jobs are actually people who, this came up in our board also yesterday, we had a discussion. And these are the jobs that were lost are people who actually were the non-technical staff, whatever it is. But then at the end of the day, we need to see more jobs are created, and it's not good news that jobs are lost. We have to make sure, we have to be sort of alert towards that. And of course, tariffs, I don't know how it will affect us. As of today, I don't see tariffs affecting the Indian real estate in any which way. I believe it will be working in our favor rather than against us.
Got it, sir. Thank you so much.
Thank you. The next question is from the line of Yash Gupta from Prestige Estates. Please go ahead.
Yash Gupta this side from Ashit Kotecha Family Office. Sir, referring to slide number 28, the Prestige City Mumbai, we are showing 90% ownership. I think we have some partner in BKC and Mahalakshmi, both the project for around 50%.
Ashish? The Prestige Mumbai. Prestige Mumbai is it North Village or Prestige Mumbai?
No, the Racecourse Road Commercial Tower.
We have given some area.
Please answer.
This 90% is basically we had given some area as per the commitments to various owners who had interest in that development. So it's because of that 90%. But if you see, whatever is available area, that 100% belongs to Prestige. It's not 50-50 as you mentioned.
Okay. And same thing for the BKC also?
BKC also, it is 100%, yes. BKC, yes.
Okay. And one question on the Jasdan Classic. Recently, we have completed that building and we got the OC also. What the revenue we have booked in this current quarter, Q1 FY26, and what revenue we are expected to book in maybe next quarter or throughout the year from the Jasdan Classic only?
So the entire project should get handed over by FY26. In Q1, there were 3 handovers which were done. So it was nothing major. But in the current financial year, whatever we have sold, which is close to 950 crores, should get recognized as revenue.
If I'm not wrong, the project is of 1700 crore GDV.
It is 1500. We have stock of around 450, if I'm not wrong. Just hold on.
Okay, sure. Thank you. Thank you very much.
Thank you. The next question is from the line of Shivam, an individual investor. Please go ahead.
Hello. Yeah, am I audible?
Yes.
Yeah, sir, I just wanted to refer to the slide number 19 that we have given a figure of free cash flows. Ongoing and completed would be around like 20,000 crores and upcoming is 30,000 crores, correct?
Yes.
Yeah, so I just wanted to ask that due to this accounting policy, when do we see that reflecting in our books, this ongoing plus completed numbers and any timeline on the upcoming one?
This free cash flows is basically amounts that we'll be collecting from our ongoing and upcoming projects. So this is basically the cash flow that company will get once the projects are completed and whatever dues are from the customers collected. And after deducting whatever costs we need to incur on construction and land. So this is around close to 50,000 crores is what we are guiding that once our projects ongoing and upcoming projects are complete, we'll get 50,000 crores of free cash flows. Now on the revenue recognition, we have close to 57,000 crores of revenue to be recognized on sales already made. These revenue will be recognized when the project is completed and handed over, which will happen over a period of 3 to 4 years. And upcoming, you had mentioned the timeline. If you see the slide, we have actually mentioned the expected launch date also. The financial year in which the projects will get launched.
Yeah, the projects will be launched, but it comes into our accounting only when it gets completed. So any timeline that when we are seeing the major chunk of our P&L getting increased, like any timeline, if any fiscal year which you are seeing?
So for ongoing projects, if you see, we have given a timeline when the projects are getting completed, and you can say a 6 months period within which the revenue recognition will happen for the ongoing projects. For upcoming projects, say from you can say 3 to 4 years is the time period when we'll require to complete the project. So for example, if we are planning for launching a project in 26, the revenue recognition will happen by financial year 30.
Okay, sir. And a ROE slide also you have given for the quarter one FY25-26. The ROE annualized is coming at around 31.96%. So do we plan to maintain this in the coming 4 to 5 years, at 31.96%, the ROE?
Yes, you are talking on the segment, right?
Yeah. The residential, office, retail services, the different segments that I am talking about residential.
Yes, it will be in that range. Again, it will be dependent on how much revenue we recognize in a particular quarter. So if revenue recognition is high and consequently the profitability is also a higher number, the ROE numbers will improve. So right now, if you see, capital employed includes capital employed on ongoing as well as upcoming project. But revenue recognition is happening only for completed. So there's a mismatch in that aspect, but it will be in that range. Just to give a ballpark number, my ROE numbers on the residential will be in that range.
Okay, sir. And my next question would be to Irfan, sir, that do we have any plans to increase our promoter stake in the company? Because yesterday I was in the DLF's call, so Mr. Akash was saying that people were hyping about their Mumbai launch, and when that good news came, the stock went down by 2-3%. So he was also like that. He also doesn't understand that how the market scenario works. So given the current valuation of our stock prices, so does Irfan sir wants to increase the promoter stake?
I don't think that I want to work the market. You see, we will want the market to handle itself the way it is. At the moment, promoter stake is 61%. I will keep it at that. I don't see any reason whether the promoter should sell or buy at the moment. And we'll see how things go. Of course, we do believe in our own company, own stock. At some point of time, if you say buy up the whole stock and become a unlisted company, is a separate story.
Okay. And sir, can you talk a bit about the sentiment in the commercial real estate market right now? Because in an interview like past 3-4 months back, you said that investing in the commercial real estate is a very good opportunity right now in India. So can you talk something about the current sentiment in the commercial real estate of India?
The commercial real estate, the number of players who are building commercial real estates are very few. So the inventory that's coming up today, it's all nice, it's fresh, it is good. Even Prestige is producing some of the best commercial assets across the country. And there is opportunity there. And we still will be, we are now waiting and working hard to complete whatever we've started, which will happen by 28. And I think at that particular time, I think our exit rentals will go up to about more than 3,000 plus crores, maybe 3,500 crores. And at commercial real estate, the demand is still strong and goes unabated. There's no risk or there's no sort of worry that we'll have vacant spaces, and things are good. Except putting a disclaimer, in a Hyderabad market, there is a slight oversupply. And that too, again, in high-tech city, there's no availability. In the other peripheral areas, there is availability, but then that also will get filled up at a price.
And sir, any plan of bringing a REIT of your company?
Plan of?
REIT listing of your commercial.
That's a long-term plan. I've been saying this. There will be a REIT for retail as well as for commercial when we reach the critical mass, which is 3 to 4 years down the line.
Okay. So you are waiting for the reaching to the critical market. Okay.
We have to get into a certain critical mass in terms of overall square footage, both in commercial as well as in retail. Then only it becomes meaningful.
Okay. Thank you so much. Thank you.
Thank you. Ladies and gentlemen, as that was the last question, I now hand the conference over to the management for the closing comments. Over to you, sir.
Thank you so much, everybody. It's been quite exhilarating, and we had some really good questions this time. The management as well as the entire team is always working hard to provide shareholder returns and to give the best. And I think the company is keeping up to their targets and will keep up to their targets, and they are all on the job all the time. Thank you again for active participation.
Thank you. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.